This is Scott Becker with the Becker Private Equity Podcast. Thrilled today to visit with Rick Kes. Rick is a brilliant partner at RSM, sort of the leading consulting advisory firm in the middle market for private equity. Used to be a middle market, now it's big market as well. Rick, always thrilled to get to visit with you and talk about what trends you're watching in the private equity business. It's been a slower year generally for transactions, strategics doing more business. Tell us what you're seeing, and when will there be a rebound in private equity spend? Because we know that the private equity businesses are institutional, need to put money to work. What are some of the things that you're watching?
Yeah, Scott, I think your perspective is well taken and similar to what we see, a slower year as everybody is experiencing, and still investment from strategics and others. But as you mentioned, there's a lot of money, dry powder there. So it's just kind of the question of when is that going to be put into use. And I think a lot of kind of the noise we had heard was, uncertainty around interest rate environments. We all know what's going up. We just didn't know how far it would go. And I think, hopefully we're starting to see some of that kind of become a little bit more predictable, and hopefully, maybe a slowdown in raising of interest rates, and we can start to kind of plan on, some certainty around, maybe where the top of that interest rate rising environment might be, and start to put some of that money to work, because I think we all expect that money to be invested at some point in the future. I think that money, in addition to debt, usually is what fuels the investment, and until the debt part of that equation is really predictable and known and kind of being able to be used, then I think we're going to kind of still be in this stage of people waiting to see when things kind of come together.
It seems like as soon as we start to get close to a ceiling on rates, some news comes out that causes some trouble. Today it was the wholesale inflation data was higher than expected. This makes it so hard to plan, doesn't it? This lack of clarity of all these different factors that go into interest rates. Because right when we think we're close, the Middle East conflict leads people to believe the Fed's going to stop for a while. Then you see wholesale inflation data go in the wrong direction today, go higher than expected. It's very hard to predict, isn't it?
Yeah, I think that's a very salient point, Scott. I think, a lot of times, when we talk to our clients and we talk, maybe at a conference, we try to think, how do we synthesize a comment and make it digestible and easy to understand? And the problem with, what the Fed does in determining interest rates is there's no one point of data that drives the decision, right? Like it could just be jobs. It could just be inflation. But, as you mentioned, it's, geopolitical items. It's also, savings rates and other kind of points of data that all influence what the decisions will be. So unfortunately, like to your point, there's not just one point of data that we can point to and say, well, if this point of data starts to trend in the direction that the Fed wants it to, they'll stop increasing rates. But, there's probably 20 different points of data that influence them, all obviously some weighted higher than others, but nevertheless, all 20 being important in that decision.
100%. So we're watching sort of, I feel like private equity deal activity is picking up some. Latest pitch book shows that in the last quarter, more strategics than private equity, but part of that's based on some disproportionate huge deals in the strategic sector, like Amazon, CVS, One Health, and some others. But what's your sense of where this is going? Have you started to see some pickup in interest from private equity deal activity and some interest in sale activity?
Yeah, I mean, I think the for me, a lot of anecdotal data is how often, I'm receiving a phone call or an email that says, hey, Rick, I need to get on the call and talk about this opportunity we're looking at, right? And I feel like that volume is definitely increasing. I'm busier than I was, fielding those kinds of conversations 6 months ago. So I think to your point, the deal volume is ticking up, at least from, my, literal vantage point of the world. As you mentioned, we do a lot of work with private equity groups and kind of particularly in the middle or the high end of the middle market. And so I think that sector of the economy is still, or not still, is maybe picking up a bit. And we're seeing a little bit more of that inbound kind of, hey, we need help on this deal kind of thing. And so I think that in particular is reason for optimism, at least for me, that, some of this tide might be turning a bit.
Fantastic. And then, Rick, anything else you wanted to share with the audience today as we watch this deal activity in private equity, pricing and debt and so forth? Anything else you wanted to share today?
I think, obviously, we're kind of coming up into, 2024, and obviously that will be an election year, presidential election year, and, a lot of governors election years. And, I think that will just kind of, again, add another component of, noise to the ecosystem of deal flow, whether, maybe there's good pieces of data that come out of that process, maybe there's, maybe not so good, but I think in an election year, I'm starting to really hear that become, part of the conversation more and more, even though it's still, over a year away. But, nevertheless, I think that's going to continue to kind of be another part of the dialogue that we hear over the next 12 months.
Thank you very much. Rick, it's always great to talk to you. I always learn something. Thank you for joining us on the Becker Private Equity Podcast. Again, Rick Kes, brilliant partner at RSM. Thank you for joining us on the Becker Private Equity Podcast.
Thank you, Scott.